Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today. I'm Tim Stenevec along with Carol Master. We're joined by Bloomberg News equities reporter Natalia Kunijevic. The company makes Oreos.
Yum, yum, yum.
Cliff Bar. That was a recent purchase. Mm-hmm. Okay. Toblerone? Is that an okay one?
My husband loves Toblerone.
This is the best one.
I agree with you.
I usually get it too when I travel. I buy it in duty free.
Oh, right, because it's
It's everywhere.
We're talking about Mondelez.
Yes, Mondelez. The ticker is MDLZ. The stock is down actually by 3.2%. It was a mixed earnings report. So on the one hand, we do see that adjusted EPS and net revenue came above expectations. However, gross margin was slightly lower. To me, the most interesting thing was global breakdown of organic revenue. So it looks like North American customers. So North America as a region took the hardest hit. Organic revenue was down by 3.4%. Expectations were for a decline of 1.8%. Latin America, slight miss on expectations. However, Europe, Asia, Middle East, Africa, sales came much better than expected. So it all comes down to U.S. consumers. We know that Mondelez has already increased prices, and they already said during the last earnings season that U.S. consumers prioritize essentials over cookies and sweets. I don't know if it's a long-term trend. Maybe it's something for just like this quarter, and then the situation will improve. But I was really surprised.
What do you consider an essential, Carol? Chocolate?
I like a little piece of good chocolate. It's funny that you say that because I had some last night. But I don't eat a lot, but I'm very picky.
The reason I bring this up,
shocking.
And Natalia mentioned this, adjusted gross profit margin rather fell 80 basis points. There were higher raw material costs and transportation costs.
Higher raw material, cocoa, exactly.
Cocoa costs are so high now.
It's actually high, but we do see that there was a decline today. We also saw that Citi analyst said that he expects prices could continue to fall in the next 3 to 6 months on lower demand.
And I will say the commentary, strong pricing execution in our chocolate business and robust growth across the vast majority of our geographies. So the company seemed like they were kind of upbeat.
Yeah.
Okay.
Now I'm really hungry.
Well, why don't you get on a plane or
There's a chocolate
book
store
a
as
trip.
soon as you come out of our building.
There is.
And they give out samples.
And they're open early and late.
And they give out samples.
Okay. Booking Holdings.
Even at 9 or 10 in the morning.
BKNG moving in the after hours.
Yeah, so it is a slight move, but I feel it's important to talk about this company because it delivered a really disappointing forecast for the third quarter. They say, of course, they see increased uncertainty, both in terms of geopolitics and macroeconomy. However, so they expect room nights growth. This is a really important indicator to be somewhere around 4.5% in the period. Analysts had expected 5.5% increase. However, the overall report again was really strong. When I looked at room nights sold, rental car days sold, airline tickets, everything beat expectations. So as of now, at least when we look at the second quarter, results are strong. People travel. And even when I look at some booking site, everything is so expensive. Everything is sold out. It's really not easy, to travel now.
Stocks up almost 13% year to date, but so interesting to see. We'll see how, maybe some more commentary, maybe after the call. Because the stock dipped, I think, initially after earnings. But you're right, kind of flat here in the aftermarket.
Yeah. It recovered a little bit.
All right.
Chart Industries.
Yes.
What is that?
This is a company, the ticker is GTLC. So this is an industrial equipment maker. The reason why the stock was up by 15.8% is because Baker Hughes, this oil services giant, agreed to buy this company for $9.6 billion in cash. And this move, of course, will allow Baker Hughes to expand into LNG sector, nuclear power. And this is your AI play because Baker Hughes is trying to diversify its business, not to be just pure oil player, but to benefit from this rising demand on energy coming from AI infrastructure, data centers, etc. Also, it's really important to highlight that this is one of the biggest deals since 2016 in the oil field services sector. And Charts really has a lot of assets. It operates in 65 manufacturing locations and has over 50 service centers globally. So it's a really strong asset for Baker Hughes.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.